It's about that time of day again, folks. Welcome back. 7:30 a.m. Eastern Time, Monday through Friday. We've got our morning prep. We're looking at crude oil this morning, and we're going all the way from the screen here in Los Angeles down to the trading floor on the NYMEX exchange in New York City. This is a very unique chance for everybody to get familiar with what we're looking for this morning. My name is Joseph. I'm from School of Trade. I've got Marty Errico along with me here this morning. He's from Traders Audio. We are excited here this morning to provide you with our crude oil morning prep. Now, once again, my name is Joseph. I'm a technical analyst. I'll begin with a top-down approach, which means we're going to start with a very slow time frame, and we're going to move all the way down to a much faster time frame. I'll begin with weekly charts and daily charts, and I'm going to finish by analyzing the overnight session, London, Asian sessions, so we can anticipate the direction at the open. This is very important because if I can anticipate the direction at the open, I can look for high percentage trading opportunities starting at 8 a.m. Eastern Time. So we're going to be prepared for whatever this market throws at us. We're going to identify some of the highest percentage trading areas on this chart, and that's going to be half the battle today. Let's begin starting with some charts this morning. I'm going to start with this top-down approach, and we're going to go right in here now to a daily chart. And the first thing I want to look at this morning is a daily. Now, we looked at the weekly yesterday. The weekly is not going to be too necessary here as we go throughout the week. I'll look at that weekly a few times during the week, but most often it'll be the beginning and the end of the week. First of all, we know we're trading inside of that price wedge. We've been inside of this wedge for quite some time here. And one of the most important things that we see here on this daily chart is the fact that we are currently trading inside of this very narrow range here, right? We have this trigger zone that held yesterday. This is something that we spoke about yesterday morning, and that was this trigger zone holding. If you recall, price tumbled lower, bounced back up. You can see we went inches from testing the top of that price wedge. So just like we said yesterday, if you recall yesterday morning's broadcast, we talked about how we were very bullish, all right, on crude oil. You can see we got exactly what we anticipated. Now as we peel off those highs now we begin to see, okay, two-sided trading, some really, really big clues here. The first clue is the big wick to yesterday's candle. That tells us price went up and came right back down. Then we can see, of course, the wick on today's daily candle, albeit getting smaller. When I came in earlier this morning, this wick was much larger. And so it definitely gave us reason to believe here we were going to get some more of this two-sided trading as we head into the end of the month of May. So the first thing the daily chart tells me is we're still seeing two-sided trading. We could easily see price rise higher. We could easily see price fall lower. We know we've got resistance overhead in the form of the top of this price wedge, and we know we have support below us in the form of this trigger zone. So we're going to use this as a really good clue this morning as far as what type of market sentiment we're most likely to see, and by understanding the type of market sentiment or the market personality, we can then anticipate those high percentage trades. So daily chart tells me, Joe, I'd expect some two-sided trading here this morning. Let's drill down a little bit further here. Go to the 4-hour. Here's a 4-hour chart, and the 4-hour chart really shows us the strength of that wedge. Look closely on this 4-hour chart, and you're going to see here that we have a trigger zone. This trigger zone drawn from the highs down to the lows, that trigger zone right in the middle, 95.78, 94.78. Do you guys recall exactly what we said yesterday? Remember this from yesterday? Yesterday morning, what did we say? We said look for a candle closing above 95.78. Did we get a close? No, we didn't. With no close above 95.78, we can only assume now that this trigger zone is considered major resistance. And since we can see this trend line so conveniently located, we now consider this, once again, there's another example of a narrow trading range. Looks like the 4-hour chart is telling us there seems to be a slight tone to the bull side, right? As you can see, we've got higher lows, higher lows here, higher lows, higher lows. We continue to see short-term higher highs. But you'll notice, of course, we got that double top at the top, right? That means we have somewhat consistent highs, but we have higher lows. So that's what causes me to say there's a slight tone to the bull side, right? Slightly bullish tone. But I'd be lying to you if I said the bulls are in clear control. It definitely looks like the buyers have a little bit more pickup in their step, right? A little more bounce in their step. Sellers appear to be just trying to hold on for dear life right now. So we know two-sided trading, consistent here, daily chart, 4-hour chart. Let's drill down to an hourly chart. The hourly chart is going to give me a whole lot more information here. This hourly chart, we'll get to this 5-minute here in just a moment, but the hourly chart here today, let me grab it here for us. Hourly chart shows us even more powerful information. We can see on this hourly chart this narrow price wedge. We can see there is virtually 1, 2, and 3 resistance areas overhead, which ultimately tells us that, just like yesterday, if crude wants to push higher, it's going to be an uphill battle for crude oil to make and keep those highs. So remember, if we're trying to trade long above 94.78, you better put your helmet on. You better trade carefully because it's going to be a little bit more difficult. So this tells us right away here, we got buy zones at 94.40, buy zone of 94.14. We have buried right into that buy zone right now, and you know what I'm looking for. Let's assume price goes up, down, and sideways. Scenario number 1, what if price trades lower? A close below 94.14, that would be a 60-minute candle closing, a 5-minute candle closing. Below 94.14, I'm going to be using my entry triggers to get short down to 93.54. Please be aware, this price wedge tells us to look for a fake out breakout at these lows. So we will be analyzing the market personality, looking to confirm that we really have those sellers in control below 94.14. Do not be that poor rookie trader out there that trades the first tick lower only to see it fail and come right back up. Now, why do I say to be aware of a fake out breakout? Because of the wedge. The price wedge gives it away. Whenever we have lower highs, higher lows, whenever we have a very distinct price wedge, we know this price wedge is a byproduct of market personality. Higher lows, lower highs, consolidation in price. That tells us that there is more and more balance in the market. What does that mean, balance? Well, remember, folks, the only reason why price will tumble lower is if there is an inefficiency in the market or if there is an imbalance. We can only assume that if price falls lower, that the demand has been exceeded by the supply. Supply has taken over, right? The bears are in control when there's too much supply in the market. So we know this price wedge is screaming at us. Be aware of the fake out breakout. That fake out breakout is notorious for a price wedge. Now, boy, we can also assume that if we have this fake out breakout potential, we could also see price just take off, hit 93.54, and then come all the way back up. That's right. In our training sessions in our live trade room, we talk about the two scenarios when it comes to a price wedge. Scenario number 1, fake out breakout, buy those lows. Scenario number 2, trade cautiously, if not skipping the whole move lower, wait for that W pattern and the following price reversal at 93.54, and we'll buy it once again. Remember, the levels that make up a price wedge, the swing low levels that make up a price wedge, are always going to be on our radar for easy buying opportunities, right? We look forward to buying the 93.54 as price falls lower. In fact, I'll be looking to buy anywhere inside of this zone once we see this price reversal occur. The higher percentage trade would be just to buy these lows. And as we always say, I'm not going to predict, I'm not going to assume these lows will hold. I have to confirm that. So what I will do is I will look for that reversal, 94.14, look for the price to exceed that 94.40, and we're buying the lows of this price wedge. As you can see here on this 1 hour chart, it looks like we have our work cut out for us below 94.14. I will be looking for buying opportunities at 93.54, and only if we see some very strong market personality below 94.14 will I consider getting short. Two-sided trading, most importantly, a tone to the bullish side here. I'll be looking to buy as this price fails to move lower, and I'll be trading very carefully short as we go below 94.14. That's the 60-minute. Let's now move all the way down now to our 5-minute chart. And on the 5-minute chart, remember, we're sitting on top of that buy zone on the 60-minute. Now think about how that applies now to our VIP chart. Our VIP chart, the very important price levels. This is a 5-minute chart. We go over this every single morning with our members live in real time in our trade room. That way everybody knows what we're dealing with. Now, what do we see here? First of all, look at this big price wedge. Some very basic trendline analysis shows us we have a price wedge. If I zoom out a little bit further, it gets a little bit cluttered, but you can see where we came up with this wedge. Right? So I've drawn trend lines coming from the highs, coming from the lows. That helps me define now this price wedge. Now that we know we have a price wedge on the 5-minute chart, that just throws fuel to the fire, pardon the pun, that throws fuel on the fire for this two-sided trading. We're heading into the bullish reversal zone at the lows of this price wedge, which means we have every sign that we need to be looking for a price reversal and a buying opportunity. Now, there is one big clue that's sticking out like a sore thumb, and that is the range of the London trading session. You've probably heard this from me before. We know by looking at the trading range how far this market has to go. And right now I can see that the London trading session is a bit too narrow, which means that we have plenty of opportunity to see this price continue. In my humble opinion, the sellers have plenty of room to take this down to our London seller target, 93.70 area, right? So 93.70 area, I'll be looking for a price reversal. What does that mean? That means that we can feel comfortable selling short, but not until we get below 94 even, 93.99. That's the line in the sand. 93.99, that's the low of that London reversal zone. So in order for me to get short here, I've got to get in below that 93.99, which means a 5-minute candle needs to close below that level so I can get short with a target at 93.70. Now, many of our students are most likely already short this morning after seeing a wonderful ABCD pattern that takes you short coming out of the London highs, and of course a target will be down at that -1. Alrighty? So now we know the sellers do have potential to push this thing as low as 93.70. Can anyone guess what I'll be doing at 93.70? Absolutely. I'll be buying. I will be looking for buying opportunities at all the levels listed below. Again, the first thing I'm looking for is a reversal out of this zone, bring price right back up. This trigger zone will be a little bit lower, right? I'll update that and put this up on the blog here in just a few moments. That trigger zone will be a little bit lower here, so just be aware of that. We just made a new lower low. So I will be looking to take profit inside of that trigger zone, partial profit target off at the highs of the wedge. Runner target will be all the way up at the bearish reversal zone. As we always say, guys, two-sided trading tells me buy those lows, take profit at the highs. Easy. Once again, I'm looking for the reversal out of the reversal zone, and I'll buy it. A close below 93.99, I will sell it down to 93.70. At any moment when we see these levels hold and we get a reversal, I will be looking for the price reversal. As I said earlier, my #1 goal this morning is to wait patiently, get price down to that 93.50 area, look for it to then bounce. And you can see here we have plenty of opportunities here on the way down. We have plenty of buy opportunities on the way down. It's up to us, though, to be patient, to grab it. There's that 93.54. That will be the ideal location if we happen to blow right on through these levels. Again, I'm not going to predict. I'm going to react. And as of right now, I'm waiting for a reversal to happen in this bullish reversal zone. We're going to buy it, bring it all the way back up. Short-term target, top of the wedge. Long-term target, top of the range. And that's what I'm seeing here. Two-sided trading here this morning on crude oil. We know it's about time to be buying these lows. We know we're going to have some profit targets up at those highs. Marty, what are you seeing over there, my man? Am I on the mark this morning? What do you think? Let's head over to Marty. Marty's joining us in the NYMEX exchange. And Marty's going to give us a very unique look now, tying together both what we saw on the screen and now telling us what he sees on the trading floor. Thank you, Marty, for being here. Take it from here.
All right, thank you, JJ. Good morning to you. So what I'm seeing is kind of similar from what you're talking about here. I'm taking a look and I'm seeing I'm seeing that reversal zone at 94 bucks. I can agree with you that far. So right, we look at the $94 level and we determine it the line in the sand, so to speak. Right, we're going to be looking at this level and we're going to try to really get a good feel for this market. Below 94, we're going to be selling. Above 94, we'll be buying. It's pretty simple here. Now, just in respect to what's happening towards the end of the month now, keep in mind at the end of the month what happens here, down here at least on the trading floor, is we have the big cruise liners coming in doing some buying. We have jet fuel buying coming in the first trading week of the month. So we see a lot of variables in this market that we want to be concerned about in the next couple days. Now, granted that it was a holiday weekend, so we're probably not going to see the actual buying and all this intimidating stuff that you guys are hearing about coming until Thursday, Friday. So I wouldn't be too worried about it for today. So I'd be following the game plan of attack today, which is watch that reversal area around 94 bucks. Treat it like it's a line in the sand, really, right? I mean, that's what I would do, JJ. I mean, so basically what we're doing is we're going to be looking for that reversal zone at 94 bucks that JJ was showing on his 5-minute chart. I'm going to be also watching what happens here with the big players. Again, they've been selling off prices since last night, believe it or not. And if we can stay above 94, we can find ourselves probably by the end of the week up at 96.75, 97 even. So that's like a weekly perspective. Look at it for the next 3 days. But really, right now, we have to really focus on the $94 level. Let's just take a quick look across the board. I have no news really scheduled for release today. I have one piece of economic data coming out in just about 1 hour. It's Redbook at 8:55, but nothing really huge. So again, I'm just going to ignore Redbook at 8:55 in 1 hour. Nothing too important. In terms of just other economic data, there was a couple things that were out this morning: NBA purchase applications and ISCSE Goldman Store sales. But that's really not anything to be too concerned about. Let's take a look across the board at all our markets, and let's take a look at the volatility here. First thing I noticed is vol is on the bid here this morning. I got volatility 24%. Open interest is a little bit lower as well. So those are just a couple things. As soon as I just look at the board, that's what I see. But let's just start from the beginning and go on. All right, crude here, 94.15 is trading. We're about $1 off of high prints and $1 off of yesterday's settle. We are seeing just a bit of some lower sell-off price action. Again, you have to keep in mind, into the closing bell yesterday, we saw a lot of put buying in the pit at the 95 even put, and that is pushing down prices here. So those are still in the market. Again, that's what the dealers were doing. They were trying to push down prices. So it makes sense. Obviously, they push down prices. They rebuy them here when they're taking physical delivery. They can hedge out into outer months, so they're looking to sell this thing off. But basically, just look at it this way. We were at the high of the wedge, right? Now we're coming down to the bottom of our wedge, and 94 bucks is going to be our level that we really have to watch. If we break below it, we're selling. If we break above it, we're buying. We have volatility at about 24%. Open interest currently stands 317,322. That's a little bullish, believe it or not, as open interest is just a little bit lower from yesterday. I have the vol index at 23.5. RBOB has been trading lower as well, but just with a little bit of a hesitant kind of sell-off to it. Still kind of chopping around. Sideways, two-sided trade in the RBOB. I got 282.81 trading on the RBOB. We're about a penny and 3/4 off today. I got implied volatility 28%. Open interest 103,593. That's bearish, believe it or not, on the RBOB. It's a little bit higher than yesterday's open interest reading. And heating oil trading at the 289 even. 289 even is what we have on heating oil. Implied volatility is just about 22%. Open interest currently stands 92,501. with that, your vol index trades about 22%, and we've been seeing it kind of start to rise just a bit in the last few minutes. Brent crude has been holding levels below the 104 level, or 103.72 on your Brent, and that's kind of giving us just a bit of an indication that the 103.5 and that 94 even are going to be some really important levels that we have to watch for the upcoming day. Just looking at a couple other of our supporting markets here without getting too far into detail. I'm looking at your Brent WTI spread right now, and our spreads are telling us to basically just kind of sit on hands for the most part, see where we open up, see if these levels will follow suit. Again, I got 951 on the spread, kind of in the middle of the sideways trade. I'm looking at counter spreads. They're all right now basically unchanged to a little bit of contingency in the price. And I'm also taking a look at your currency markets here. As we look at your dollar, right? So crude's trading lower. We have your dollar right now this morning here, trading just a bit lower as well. So we have that dollar sentiment trading lower with the crude. It's driving us all crazy here. But again, I wouldn't get too concerned about the dollar and why it's trading in the same direction with crude. Don't try to figure that shit out. I mean, it's not even worth it. But just make sure you guys just use the dollar as a correlating market. So look, it's in a reversal zone. We're about to reverse on this dollar here. And I think that we can possibly get back up into the 84 even level as they find good value around the 84 even level. So I wouldn't want to rain on the dollar's parade. I think it can make it back up to the 84 even, and I think we shouldn't fight the currency markets for sure, because I mean, you know, these are what's influential to our ranges. So let's just talk about levels. I'm just going to do crude. Well, first, natural gas. Let me tell you guys about natural gas, and we'll talk about some levels. Natty gas, guys. Expiration today. We have expiration today on natural gas for the June contract. We're trading front month July at the moment. Thank you. Thank you. So we're trading front month July. Exactly. Yes, thank you. Okay. So we have our expiration today, and we want to keep an eye on expiration. We're going to be very volatile, I'm thinking, here in the next couple of days. Keep in mind, inventories are tomorrow, along with the crude inventories. So we do have a huge gap in price, you can see this morning. Right now I have natural gas in the July contract here currently trading at, let's see, 422.40. I got 422.40 trading, so it's a pretty big gap here in between from yesterday's settle. So you can see the upward resistance ahead. Again, I'm looking at 431, 433.50, and I got 435.80. So I'm really going to keep an eye on those levels here of resistance above, and that's really all I'm worried about on natural gas. Now let's just go over some levels here before we wrap it up. I got levels here on the crude. I had yesterday's pit session high at 95.92, the pit session low at 94.87, and the close and settle at 94.99, and just below 95 even. We had a net change of about 26 pennies to the downside. We had a $1.05 range. Today I have your daily pivot at 95.26. Implied volatility drifts around at 24%. I got our resistance levels. Okay, so resistance 95.65, 96.31, and 97.38. Some support down below 94.60, 94.21, 93.16. So let's keep an eye. If we happen to break below the 94 even, let's keep an eye here on that 94.20, which was one of JJ's levels, and 93.16. But I don't think we get that far below 94 even, so I wouldn't even be too concerned about that. That's about it. All right, guys, I see you all in just a little bit. Again, I'll see you all just in a little bit, in about an hour. I'm going to throw it back over to JJ here as we are getting ready for our precious metal futures products to open. All right, guys, I'll see you then.
As always, Marty, thank you so much for coming out and joining us today. Thank you for all your time here, braving the elements on the NYMEX exchange. And as always, thank you to the entire team at Traders Audio. You guys do a great broadcast every morning. Don't forget to go out and join Marty's Crude Oil Squawk broadcast. Very, very good broadcast. Him and Jeffrey do a wonderful job every morning, starting 10 minutes before 9 o'clock Eastern Time. You can contact Marty at tradersaudio.com. Say hello to him and the rest of the team there at Traders Audio when you talk to them. And, of course, my name is Joseph James. I'm JJ at School of Trade. I'm from School of Trade, and, of course, I run a live trade room every morning at 8 a.m. Eastern Time where we trade crude oil, euro, gold, and, of course, can't forget about that mighty mini Russell. As always, thank you so much for coming in and joining us for today's Screen to Floor, a very unique way to start your day. Don't forget, everybody, we've got charts that are posted for you every morning on our blog. If you head over to sidewaysmarkets.com, there's a link right at the top It says crude oil squawk and prep, and that will give you all of today's charts. And of course, I'll be putting up the recording video later on this morning in the session. Have a great afternoon. Have a great morning. Be ready for those two-sided trading. Looks like as I speak right now, we're just about ready to look for that entry here to get long here on crude coming out of the reversal zone. So we're buying pullbacks up to 94.46, 94.39, 94.40 makes for a great target on the way up. Have a wonderful morning, everybody. Thank you so much for tuning in, and we'll see you tomorrow for a Thursday edition of the Crude Oil Morning Prep. We'll see you guys in 23 hours and 30 minutes. Adios, amigos. Bye-bye for now.